everyone, and welcome to the week ahead from ICM.com. First, we're going to start by talking about the key movers that impacted the market during the past week and the past couple of sessions also. And then we're going to highlight the top economic indicators to be released during this week and go over the Metatrader 4 platform to do some technical analysis. So first, the COVID-19 second wave, it's still like a key concern for central bankers, especially that the cases are still soaring around the world, in the United States, in the Euro region, so this could impose stricter measures. However, on the bright side, yes, last week we had an announcement from Pfizer and BioNTech about their late stage trial for the vaccine, and it showed like 90% efficacy, and this had also a huge impact on the market. We saw a positive mood or risk-on mood prevailing. Stock futures, they were rallying into record highs like the Dow Jones and the S&P, where gold prices were dipping, and we've seen a flow out of the safe haven. Also, a while ago, one of the key companies that's also working on one of the vaccines using the same technology, the mRNA. So Moderna, they announced also the late stage trial results showing efficacy of 94.5%, which is much higher than, which is almost 5% higher than the one that Pfizer announced about. And also, they just signaled that their vaccine is better or could have better life within the needed medium. So it's a bit better than what Pfizer is just offering. So this also had an impact on the market. We saw Dow Jones rallying again, and safe havens like gold were suffering a bit. The Reserve Bank of New Zealand monetary policy meeting also took place last week, where the bank just kept policy unchanged as widely expected. However, there was a little bit of an upbeat tone from the central bank governor. He highlighted that the bank is not considering a negative interest rate in the near future, and also the money markets, they did price that the bank will keep the current policy rates for a while and not adopt a negative interest rates. So this was a bit positive for the New Zealand dollar, and we saw the New Zealand dollar rallying to its highest prices since almost late 2018. The European Central Bank Forum took place also, it was on the spotlight on Thursday, as key central bankers, Jerome Powell, the Federal Reserve Chairman, Bank of England Governor Andrew Bailey, and also the European Central Bank President Christine Lagarde, they all almost had speeches on Thursday, but usually they didn't have any new surprises to the market. Only they confessed that the vaccine news is positive. It's good, but still on the short term, it's just the soaring numbers that's impacting. Since we're seeing that the soaring numbers, they are forcing businesses to close for a while, and governments to take certain restrictions, and this will definitely weigh on the economic activity on the fourth quarter. However, vaccines, if they will be available during the first quarter of 2021 or second quarter of 2021, this is a good news on the medium term. So this is for the vaccine and the central bank governors. The U.S. elections also, we had an update in Georgia. They will be recounting the votes. So this is just one of the events that we have to watch out for. If Donald Trump regains Georgia, this is a good push for him to appeal in other states also, and this will just trigger more uncertainty in the market, and this definitely will lead to certain opportunities. So these were the key movers, and most of them, they will continue to weigh in the market. For example, the COVID-19 spread will continue to weigh. News about the vaccines, any headlines about the vaccines will continue to weigh. We are also awaiting some headlines from AstraZeneca, and also any updates on the US elections will have an impact on the market. So now let's highlight the top economic indicators that will be released this week. Okay, so first we start with tomorrow early with Australia, the Rba Meeting minutes of the last Reserve Bank of Australia monetary policy meeting, where the bank decided to take additional easing measures. So this is just gonna have a bit of interest for traders. Moving to the United States, you have the retail sales for October, expecting an expansion of 0.5% versus the prior reading, or a reading of 1.9% in September. So this is just hinting that the economic activity started to slow down going to the fourth quarter. due to the rising coronavirus cases. Also, from the United Kingdom, there will be a speech for the Bank of England Governor Bailey, where mainly he, in his last appearances, he highlighted the risks erupting from Brexit, and the bank already took some measures to ease the impact on the economy. Industrial production from the United States, also expectations of a rise by 1% in October versus a contraction of 0.6% in September. The European Central Bank President Christine Lagarde will be speaking 4 times this week, like on Tuesday, Wednesday, Thursday, and Friday. And today also she had an appearance, but like she's not going for something new. She's not telling us something new. It's all almost priced in the market. Also from the United States tomorrow, the American Petroleum Institute weekly crude oil stock. Moving to Wednesday, we start from the United Kingdom with the inflation figures, where consumer price index for October is expected to drop by 0.1%. Moving to the Eurozone, also consumer price index for October is slight rise by 0.2%. This could be a bit of a good news. From the United States, we have the building permits and housing starts, also a bit of a rise in both of them, 1.56 million in October and 1.46 for the housing starts. From Canada, the consumer price index also rise by 0.2% anticipated. The European Central Bank Christine Lagarde will be having a speech, and one of the important indicators for oil traders, the crude oil inventory by U.S. Energy Information Administration, expected to show a contraction or a drop by almost 0.913 million barrels. On Thursday, we start early from Australia too with the jobs figures. Employment change is expected to show a drop of 30,000, while unemployment rate to jump to 7.2% from 6.9. Christine Lagarde will be speaking again. Initial jobs claimed to show a rise by only 705,000, which is the lowest since the pandemic. Philadelphia Fed Manufacturing Index to show a drop towards 24.0 from 32.3. This is just a key indicator of how the activity is going there, especially as COVID-19 cases soared in November. Existing home sales from the United States also for October expected to come in at 6.45 versus 6.54 previously. Friday, we start with the retail sales from Australia, expectations of a contraction by 1.5%. Retail sales from the United Kingdom to show a slight surplus or a slight expansion of 0.1%. We're also showing the impact of the second wave of COVID-19 on the British economy, and this is just going to also trigger some alerts and concerns on the reading for November. European Central Bank President Christine Lagarde will be speaking on the day. Retail sales figures from Canada also to show a slight increase by 0.1%, and we end the week with the US Baker Hughes oil rig count. So these are the top economic indicators or economic releases to watch out for in the coming week. So now we're going to move to the Metatrader 4 platform to have some insight on the latest price action. So moving to the euro dollar, on the daily chart, you can see we're just we had a bit of an upside move, but still on the bigger picture, we're still stuck inside this consolidation range. It's almost a 300 pips consolidation range since the election. We're just trading in it, awaiting some like key drivers where it could press the market outside of this range. It's either we break above 119 on a bullish scenario and drive higher towards 120, which is a key area. Well, also this rise towards 120 could trigger some comments from officials about the impact of a strong euro on the economic recovery. Also on the downside, we have to highlight key levels, the previous support of 1740 ahead of the bigger support area near 116. So these are the key levels if you are trading the euro against the United States dollar. We're just gonna dug deep into smaller time frames. There's this trend line where you can watch out for any break back below it, also for more bearishness on the pair. So this is for the euro dollar. By adding here the moving averages, we're going to go to the daily chart again. So you can see how we're just trading inside the certain range. It's very clear, especially on the Bollinger Band, that we're not having a big of a directional move. We're just trading inside this range where the bands of the Bollinger Band, they're a bit wide, especially following the surge that took place following the elections. So we're currently almost trading near the 100-day exponential moving average. Watch out on a bear scenario. You have to watch out for any break below 100 day exponential moving average, because it could trigger a bigger correction for the whole move from almost 111 towards 120. So this is for the British pound against for the euro against the dollar. Moving to the British pound against the US dollar, still on this picture, we're still inside the channel on this zone. So if we just draw, we're still trading inside this channel near almost upper band. So we had a rebound from its middle line. The Brexit is weighing on the outlook for the British pound, especially following today's comments from Boris Johnson that the United Kingdom would prosper without a trade deal. This is just signaling that things aren't going well in the trade talks between the European Union and the United Kingdom, and this just would add more uncertainty and more fear in the market. So watch out how the British pound could evolve in the coming days as talks continue. The key levels to watch out for: 32.40, 33.15. These are the key levels on the short run, while on the bigger move, definitely 134.80 remains a big cap for any move higher. So this is for the British pound against the dollar on the bullish scenario, while on the negative scenario, any drop back below 131 could trigger a bigger drop and a bigger correction towards 128.70, 129.20 area, which was key support area during October. So this is all the key levels. These are the key levels that you need to know about if you're trading the British pound against the United States dollar. The dollar against the Japanese yen. So on the bigger picture, we're still trading almost at this trend line. We failed to have a clear break above the trend line, so you can just combine the previous stops posted since July. We're still trading below this trend line. While 104 level was key support for a while, we had this drop on the election week, and then we had a bit of a reversal, but still the trend line is capping any move to the upside. For a bullish movement on the dollar yen and the retest of 106, 107 levels, we definitely need to have a clear break above the trend line, which coinciding with the 100-day exponential moving average. So you can see how I'm just going to remove these. I'm going to remove everything and just keep the 100-day exponential moving average. If you can just add it here, you can see how it is coinciding with the previous, with the trend line. So any break above it would be a clear breakout from the current move that we were witnessing for the past couple of months. So this is for the dollar yen. These are the key levels that we should highlight. The dollar against the Swiss franc. So on the bigger picture, we're still inside the same range, also between almost 0.90. We were able to drop slightly below 0.9, but still we're trading in it. So 0.92 continues to be a key resistance area, 1, 2, 3. So you can highlight the points how many times the 0.92 level was key level for the markets, and we had recently the pullback from this level. So this is a key level where any break above it could lead to a bigger run towards the previous stop of almost 0.9290, 0.93. So this is just for a bullish scenario or a bullish movement on the dollar against the Swiss franc, while any drop back below 90.40 could trigger further drops to retest the recent low of almost 0.8980. So these are the key levels for the dollar against the Swiss franc. By adding these indicators here, also you can see how the 100-day exponential moving average was key resistance 1, 2, and 3 times. So any break above it could lead to a retest towards the 200-day exponential moving average, which is coming closer to the previous stop. The Australian dollar against the United States dollar, we're trading inside the consolidation range between almost 73. 40 and 72. So this is the range that we're currently stuck in, almost 120 pips range. Any breakthrough to above 73.40 could lead to a retest towards 74, 74.10, and while a bearish scenario could lead to a bigger drop where we have a bigger potential of a drop towards 70. On the economic, on the COVID scene in Australia, it's a bit better than the rest of the world. Due to the lockdown measures that they took, they were just they had a good response that could turn out positive on the economic activity in the coming period. The New Zealand dollar, as we said, following the announcement of the RBNZ, it was still positive. It got a strong push to the upside, especially that also New Zealand, it's just in a better situation than other rivals, especially when it comes to COVID. So this is one. You can just cap the coming top by combining. If you use a trend line to combine the previous tops, you can just highlight the key resistance between 0.6930 almost 0.6970. This area was a clear rejection back in late 2018, early 2019. So watch out for any break, watch out for any rejection when you test again this area above 6920 almost. While any drop below the interim support of almost 68, which was previously almost clear to the previous tops, 68, 67, 90 could lead to a bigger drop and a bigger correction, where we could be retesting 0.67 again. The dollar against the Canadian dollar, also the 200-day exponential moving average was a key point or a key indicator for the past while. However, we're currently taking the 20-day simple moving average, the middle line of the Bollinger Band, a similar resistance area. So you can see here we have a resistance and another resistance, and then we had a break above it, and now here we're having resistance again. So this could just narrow our trading vision to a certain level that we can be trading. So on the downside, 29.20, while on the upside, any break above 31.60 could lead to a retest to the 100 and 200-day exponential moving average. So we could be rising somewhere towards 32.50. 33.50 area, so this 100 pip range, while any break or a continuation to a move downside would put a 129.90 as a key level, as a key target, and then the previous bottom of 29.25. So these are the key levels for the dollar against the Canadian dollar. If you just go closer on the chart, we have this channel here, and we had a correction. So if you just can draw a channel that we were trading, and they were able to break back below it. We had a retracement towards the middle line of the Bollinger Band, then another dip lower. So these are the key levels, and this is the pattern that's currently trading on the dollar against the Canadian dollar. On the short run, watch out for any retracement or any reversal back above 31.20. Gold prices, I'm just going to highlight something for gold. It's just so interesting what we're seeing on gold. So first, we can highlight that since the Pfizer announced the vaccine, the market retraced exactly 38.2. And following that, we had also a move higher where a retracement of 88.6 took place. And then if we just go for an extension for this movement here, we can see that the market grows exactly towards the 123.6 earlier today and head to 113 ratio. So this has just triggered a certain rejection, where you can draw just by using the trend line. You can draw what happened. And here, this was the headline from Moderna, where it triggered a big market sell-off. So you can see that the market is just trading inside this channel. Almost had a clear drop towards the bottom of this channel. So we're trading on the bigger picture. We're trading inside this channel. So definitely we have to highlight these levels as key levels, and any break out of this range could be a trading scenario that you can follow. So these are the key levels. I'm just going to highlight the interim resistance, which was almost near 1885. You can see how this level was sensitive, or was just implying some certain market action 1, 2, 3, and 4 times. And on the break above, we had a sharp volume for a break above, and also here it was just on the headline. So this is just triggered also additional volume for the drop. So these are the key levels for gold. They could be guiding you in your coming trades. So watch out how gold could come and play. By adding the indicators, we just were trading sideways near the 100 and 200-day hour exponential moving average, but the market following the headline, we're back now towards the lows. If you just go to the daily chart, you can see that we're trading between the 100-day exponential moving average in the lower band of the Bollinger Band. So watch out for this range to be the coming range if like the risk-on sentiment prevails in the market and the positivity surrounding a vaccine will continue to weigh on gold. So this could be the coming range that we would be trading inside. So this is just for gold. I'm just going to highlight the range that I'm talking about now. So it can be between 1828 and 1903. Why 1888? If you just go for the bigger move, the bigger correction from the bottom to the top, it could be almost around. So following the latest correction and the latest rally that took place, this place here could be the 61.8 exactly. So we're just having a confluence between the 200-day exponential moving average and the Fibonacci retracement. And also, if you just to draw the bottom, combining these two bottoms, you can see that we have a confluence with all these three levels. They are all hinting for 1828 as a key level for gold in the future. So watch out for this level. So on the daily chart, silver is just also trading sideways up. So also you can just draw this channel here where we had the rejection exactly from the top of the channel. 1, 2, 3, we had the rally towards the upside of the channel, and then we had another move lower. So this is for on the bigger picture, while on the smaller picture, this is just the consolidation zone that we're trading in. Also on the daily chart, mind the 100-day exponential moving average. On the hourly chart here, you can just check the levels that we were trading at again. So you can just combine the previous bottoms where we just closer to the bottom. Silver is being a bit weaker than gold, while also silver was stronger than gold on the break of this consolidation that took place following the Pfizer headline. Moving to Dow Jones, which is rallying again following Moderna headlines. So on the bigger picture, we have to highlight these key levels: support zone of almost 28,800 and resistance area near 30,000. So this is just 1,200 pip range, almost 1,200 points range that we are currently trading in. If we want to highlight some extensions or a certain extension towards the upside, you can just draw the extension from the point that we got a reversal at last time, and it can hint for a rally towards 30,347 and maybe an extension towards 161.8 of 30,770. So these are the key levels if you are just willing or just awaiting further appreciation in the Dow Jones or further rally to the upside in Dow Jones. While any reversal or a drop back below at least the interim support area that we were trading at earlier during the day, 26,690, and the drop again below also 29,350, 370 could lead to bigger deterioration, a bigger drop in the Dow Jones, excuse me. Highlight the levels again. So these are the key levels if you are trading the Dow Jones. Moving to oil, which is also having some positive rally following Moderna's headlines. So this is just hinting that we could be heading for a strong recovery as life comes back to normal. So 42.30, we highlighted this level during today's YouTube session, and the market exactly rallied towards this resistance and then ran into selling orders, and we dropped again around 45 points. So this is these are the key levels for oil. Any drop back below the resistance area, which is currently acting as support near 41.20, could lead to a bigger correction towards the 200-hour exponential moving average towards 40.25 and then 39.60. So these are the key levels on the downside if we're going to have a bigger a correction or any affection to the risk on mood. Maybe this could be driving the market lower again. However, if this bullish scenario prevails and consists, we can just highlight previous. So I'm just going to remove everything and just rely on the price on the chart itself. So we can just highlight the previous zones here. So you can see here this area, previous resistance, 43.80, and then any break above 43.80 or rally towards the previous highs could lead to a range of trading between 43.80 and 48.70 area. So this is all about oil, and this is all for today's session. If you just have any questions, please write them down. I'd just like to remind that all the information, news analysis, and opinions mentioned in this webinar, this week ahead, only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument. and ICM doesn't provide any investment advice. So this is all for today's session. If you have any questions, please write them down. Perfect. This is all for today's session. Wish you all safe trading throughout the week, and thank you for joining.